Hi, I'm Keith Weiner, CEO of Monetary Metals. At Monetary Metals, we're all about alternatives to the dollar, which we're not really in favor of, as regular viewers may know. So instead of talking about gold and silver today, we figured we'd talk about Bitcoin, which is now getting a lot of buzz. So what is Bitcoin? Bitcoin is a purely electronic currency that allows people to conduct transactions anonymously, instantly, and globally. It allows people, for instance, in Kenya to buy something in the United States and have the money transfer without audits from the governments or their central banks. Bitcoin since June has gone up about 7 times in dollar terms. Since about mid-January, it's gone up about 3 times. So Bitcoin right now is rising very rapidly, as we can see from this chart. In fact, I would almost argue it's going up parabolically at the moment, which makes it quite risky to get in. But we're not here to analyze the Bitcoin price. We're here to answer the question, is Bitcoin a competitor to gold? Is Bitcoin money, or is it just speculation like tulips? So let's take a step back and take a look at how Bitcoin is actually used. There are a number of companies that have recently announced that they accept Bitcoin in payment. And so we'll take a look at WordPress, which is probably the highest profile amongst them. So WordPress, of course, sets their prices in dollars, but now they accept payment in the form of Bitcoin. So let's go back to Kenya as our example, where a Kenyan may have Kenyan shillings, that's the name of their currency. The Kenyan can take those shillings, exchange them for Bitcoins, use those Bitcoins to pay WordPress for WordPress's products and services. WordPress can then take those Bitcoins and exchange them back for the dollars at the current exchange rate, which is how they set their Bitcoin price to begin with. Exchange those back for dollars, and then WordPress has got what they wanted, the Kenyan got what he wanted, everybody's happy. Note that it's interesting here that at no time does any of the parties to this transaction actually have to store Bitcoins. The Kenyan has his shillings, he uses the shillings to get Bitcoins, gives the Bitcoins to WordPress, WordPress uses the Bitcoins to get dollars. So in this case, Bitcoin seems to be working as a currency, as a medium of exchange, especially in transactions that are part of what we could call the underground economy. So now let's take a look at Bitcoin itself. How does it work? What is it? 2 properties stand out if you take a closer look, and we're going to put on our technology geek hats here a little bit. First is that it takes compute time, which basically is money, to produce a Bitcoin. The way this works is you download a computer software program, you run it on your computer, and your computer is running through a giant loop looking for numbers that have a particular property that make them work as Bitcoins. This takes a lot of time, a lot of money. People are now actually selling dedicated hardware systems to do this. And so this is called Bitcoin mining, analogous to gold mining, I suppose, in a way. The other property of Bitcoin, and this is built into the way their numerical system works, or the way their cryptographic hash system works, is that the quantity of Bitcoins total that can possibly ever be produced is finite, and that over time, Bitcoin mining is going to asymptotically approach this theoretical maximum number of Bitcoins. And so both of these characteristics are essential to the design of Bitcoin built in from the ground up. But from an economic standpoint, what are we really dealing with here? We're dealing with, number one, the labor theory of value that says that it's the work or the labor or the effort put into something that gives it value. And then the other is, of course, the quantity theory of money, which readers who have read my previous papers have known that I've debunked this quantity theory of money many times. And so Bitcoin, in a way, takes 2 false economic theories and integrates them, and that's the basis for, or part of the basis, I should say, for Bitcoin. And the question that readers should really contemplate here is, how can labor and finiteness imbue value in and of themselves? If Bitcoin has no value other than these 2 characteristics, how do these 2 characteristics give Bitcoin some value? So let's compare now Bitcoin to the dollar. The dollar is, of course, fiat, and the first thing that Bitcoin fans will note is that Bitcoin is not fiat. With Bitcoin, you have a choice. And so that is a key difference, and we have to agree, we have to acknowledge Bitcoin is not a fiat currency. Whatever it is, that's not what it is. Secondly, the dollar, as we've said in previous episodes, video in this series, the dollar is debt. It's based on debt. It's backed in debt. It is a debt instrument. Bitcoin can be stored on your own computer. It's not the debt or credit of any other party. So to get to the essence of our question, which is Bitcoin money, let's take a look now at the story of the origin of money. We don't know if this happened 10,000 years ago or 25,000 years ago, but at some point, man rose up above the level of pure subsistence and for the first time produced a slight surplus. The person who was fishing in the river at the time produced more fish than he himself needed for his own immediate consumption. And what this allowed was trade. People could trade fish, for example, for leather moccasins, and society as a whole was enriched. The problem that they encountered with this direct trade was what's called the coincidence of wants. What happens when the guy who makes the leather moccasins comes to the fisherman and says, "I'm hungry, let's trade," and the fisherman says, wait a minute, I have plenty of leather moccasins, I don't need any more right now, thanks. They both have a problem. Obviously, the guy who makes the leather moccasins has a bigger problem. And so what he has to do, over a period of probably thousands of years, is discover the concept of marketability. Each kind of good has a different degree of what we call marketability, and some are much more readily acceptable in trade. Some goods are more readily acceptable in trade than other goods. For example, salt is much more marketable than, say, leather moccasins. And so over time, this most marketable good evolves. Salt, wheat, cattle, at one time and in one place, these were money or monetary goods, eventually evolving to what we have today, which is gold and silver. And so that leads to the question, why is money a commodity? We said money is the most marketable commodity. Why is it a commodity at all? And I think the answer is pretty simple and pretty obvious, but it can be overlooked in today's system of electronic banking and the internet, which is if I work hard and take risk and invest capital to produce a product, and I trade that away in exchange for something, at the end of the day, I want something tangible, I want something real. And so this is an actual gold coin of the United States in the 1890s, a 1-ounce gold coin. At the end of the day, I'm getting something back, which is a tangible good. Gold is the most marketable commodity. That's why we refer to it as money. That's why it's universally acceptable as money today. Even in the case of a redeemable paper currency, going back to 1890, there were paper dollar bills in circulation, and the reason why they readily were in circulation, people readily accepted them, is that they were redeemable. You could actually get the gold coin if you wanted it, and occasionally people did. So now we come full circle to our question, is Bitcoin money? And I think the answer now, given our discussion, is obvious. It's a currency. It's an interesting medium of exchange with some fascinating properties and built on some incredible technology. But Bitcoin is just another irredeemable currency.